Hi, I'm Hannah Wallace and welcome to FinextraTV. Calling into our virtual studio today is David Postlethwaite, Strategic Projects Manager for Jersey Finance, and Harry Briggs, Associate Director at KPMG Channel Islands. So welcome to the both of you. Thank you very much for calling in.
Thanks for having us.
Yeah, thanks, Hannah.
No problem at all. So today we're discussing the global financial services industry and how it's currently undergoing a major transformation with digitization and sustainability being the main drivers, two areas we're covering more and more. And what's really interesting is looking at how the two concepts intersect, which is where I'd like to begin today's interview. So Harry, coming to you first, what are your thoughts on this? And then David, perhaps you could share your views so we gain both a fintech and sustainable finance perspective. So Harry, kick things off.
Yeah, sure. Thanks, Hannah. So financial technology, or fintech, if you will, and sustainability are both driving parallel revolutions through financial services at the moment, and it's for different reasons. So looking at fintech first, when we think about fintech, we tend to think about payment apps or robo-advisors because that's what we see in the retail world. But it's also about back office business to business solutions. So cloud-based regulatory technology, that's a good example, and that can really help with reporting or compliance. Sustainability is very different. So that's all about a societal shift, people, institutions wanting to do no harm and also wanting to mitigate climate change. So in terms of the intersection, I guess there's a few touch points. So regulatory technology is an absolutely massive one. So the scale of investment decisions being made nowadays on the basis of sustainability credentials has led to investors demanding more and more information, and getting that reporting right is absolutely critical, and regulators are catching up with that as well at the moment. So there's an absolute tsunami of non-financial reporting requirements coming down the road in the next couple of years, because we've got the task force on climate-related financial disclosures being rolled out across the UK, and in the EU we've got the sustainable finance disclosure regulations being rolled out. So regulatory technology is going to be absolutely essential to help meeting those reporting requirements. I think in another sort of subsector of financial technology, we've got wealth tech. So over the last few years, there's been this huge growth in robo-advisors that people are now sort of getting more and more familiar with. A lot of those robo-advisory products are pivoting to sustainable investments, and that's really going down well in the retail market at the moment, where sustainability is a really key priority. So it's definitely a really exciting time for both fintech and sustainability, and they really do support each other as parallel sectors.
All right, and David, that's quite a nice segue into your sustainable finance perspective. So what are your thoughts here?
Yeah, absolutely. Thanks, Hannah. I think we've seen a lot of focus recently on the power of fintech to unlock the potential of sustainable finance, and sustainable finance in turn to help drive the growth of fintech. And what we're hearing from our members at Jersey Finance is that fintech and subsectors that Harry's mentioned, like RegTech, have real potential to help overcome some of the barriers that they're currently facing when it comes to scaling up sustainable finance, whether that's in terms of standardization of data or driving down the cost of compliance. So for financial centres like Jersey that have both a strong fintech cluster already in place, as well as ambitions when it comes to their credentials for sustainable finance, understanding that intersection is going to be absolutely key to our future success. So we already have around 400 plus digital and creative businesses here on the island in Jersey. That's around 3,000 people working in that sector. And that's in addition to the wider financial services industry, which is a custodian of 1.3 trillion of wealth, nearly 400 billion pounds in regulated funds alone, 14,000 people. So for us, it's about combining the power of those two sectors and rethinking traditional financial models of financial services, integrating more technology to help us really leverage our capital and our expertise in support of that global transition towards a more environmentally and socially sustainable economic model.
All right, so you've certainly both set the scene for us there. So what are the specific features and indeed use cases of that intersection in international finance centres such as Jersey? So Harry, could you kick things off there?
Yeah, sure. So I think regulatory technology really comes into its own here. So if you think about the makeup of the financial services industry in Jersey, it's really dominated by service providers, whether that's in the private wealth space, the fund space, or even banking. Now, historically, there's been a real lack of standardization in sustainability reporting, with each investor just looking for information that was important to them. So it was really hard for Jersey service providers to create some form of offering or deploy any technology to help with that. And as a result, a lot of that non-financial reporting has historically fallen on the asset managers who aren't necessarily on the island. But now that's all changing. So investor demands are converging around common sustainability reporting standards. So whether that's the Task Force on Climate-Related Financial Disclosures or the EU SFDR that we mentioned earlier, there's a commonality that's emerging, and that really opens the door for a lot of Jersey service providers to create an offering and use regulatory technology to make that viable, helping to harvest the huge amounts of data that they need to in order to provide sort of insightful sustainability reporting. And that reporting will look different. So reporting on a portfolio or private or unlisted investment, sort of in the PE, credit or infra space, that's going to be quite challenging. And that's where the real opportunity for a lot of administrators and fiduciaries in Jersey is, to offer non-financial reporting at that level and that granularity. And there's a few early movers in that space that are investing quite heavily in it at the moment. Listed portfolios become a little bit easier, and there's more data available naturally. And I suppose a good example of reporting there is KPMG ourselves. So we've actually just developed a product with the University of Cambridge's Sustainability Institute, and that provides reporting on a listed portfolio, and it's reporting that aligns to the UN Sustainability Development Goals. And it just makes reporting easier, whether that's a service provider providing it to their clients or whether we're providing it directly. It gives you this insight into that portfolio and all the credentials, whether they're good or bad, against the UN Sustainability Development Goals. It's a really good example of where you get that intersect between sustainability and financial technology. And it's just providing that insightful reporting on a portfolio's impact.
All right, so that's a really positive outlook. And David, what's your take on this then?
Well, I echoing what Harry says, really. I mean, I think we're seeing some really encouraging signs of developing symbiosis, if that's the word, between fintech and sustainable finance, with technological solutions being deployed in the local market to make sense of the data that underpins ESG disclosure and best practice there. And I think this is improving the quality of the reporting for investors and really allowing clients to meet their growing regulatory obligations. You know, when you're a fund manager and you're marketing into the EU from Jersey, you're now required to comply with the obligations of SFDR, and that is creating new demands, new challenges. And I think with further policy interventions that we're going to see in the UK with TCFD that Harry mentioned, clearly there's going to be more demand than ever for this type of solution. And I think as the Finextra impact report that's just been published notes, there is clearly potential for technologies such as AI and distributed ledger technology to be embedded into ESG solutions to help extract insights from historical data and really allow asset owners and investors much better visibility over the sustainability credentials of the underlying portfolio. So that's really about building trust and improving, I suppose, market integrity. But there's clearly a lot of untapped potential as well in places like Jersey. I mean, we have fantastic fintech startups. I could mention AgriLedger, for instance, that's developing tools to improve trust and traceability within agricultural supply chains. So the challenge for us now, I think, is to take that know-how and that entrepreneurial spirit and drive that we have here and use it to provide innovation and market integrity to sustainable finance.
All right, so I think it's fair to say watch this space, especially in terms of the technology being developed, as you say, David. So Harry, coming back to you, how is Jersey adapting to that intersection in order to enhance its attractiveness in the market it serves then?
Yeah, so fintech's already fairly well embedded in Jersey. I mean, from a service provider point of view, there are different stages in that journey of their adoption, but nearly all of them are looking at technology to help them cope with reporting demands and to meet their clients' expectations. I think it's also worth noting that Jersey as a jurisdiction is a real hub for venture capital funds, and fintech is a major sector for VCs at the moment. So KPMG actually run a survey called Pulse of Fintech that tracks investment, and that found that investment just in the regulatory technology subsector of fintech hit $10 billion for the first time last year. And that's a trend that we're expecting to continue, and ESG regulatory reporting technology is going to be a major part of that as well. So Jersey's sort of really well placed because it's already got a deep expertise in that sector, so it's perfectly placed to serve those VC funds. And we're actually seeing more and more coming to the island as a result, which is really good. On the sustainability side, well, we now have the Jersey Finance Sustainability Strategy that David's led and rolled out. And that really puts sustainability right at the top of the agenda for the island, which is great. We already have quite a lot of sustainable investment portfolios that are being serviced from service providers on the island as well. So there's already a lot of expertise embedded into the Jersey financial services sector. I suppose what we're seeing now that really is driving the intersect is this huge growth in non-financial reporting. That's absolutely the key intersection between fintech and sustainability at the moment. And fintech is really there to enable us to provide the level of insight and reporting that really is quite unique to sustainable investing. You don't see the granularity of non-financial reporting in other sectors that you do in sustainable investing. Now, there are a lot of early movers in this space in Jersey right now who are investing quite heavily in their ability to meet that demand and meet that sort of granularity of requirements. And I think the timing is bang on to be doing that at the moment, because you've got this rollout of TCFD in the UK we've mentioned already, with the EU also rolling out SFDR. You know, the fund industry, particularly in Jersey, is going to be hit one way or another by those regulations as they roll out in the coming years. And also on the private wealth side, you know, they have less regulatory reporting perhaps, but you've got this huge movement and groundswell of private capital moving into sustainable investments. And those investors are demanding very similar levels of reporting themselves anyway, regardless of the regulations. So there's a huge intersect between that regulatory technology piece and sustainability at the moment.
All right, so you've highlighted some of the current trends in Jersey and touched on what we can expect from the future. But David, perhaps you could take that one step further and tell us what the future looks like for sustainable finance, especially in centres such as Jersey.
Yeah, so Harry has already mentioned the strategy that we're rolling out, and I suppose it's worth just taking a few seconds to think about what it means to be a sustainable finance centre. A sustainable finance centre isn't about products or labels per se. What it is, it's a financial marketplace that contributes to sustainable development and value creation in economic, environmental, and social terms. So we have an ambitious strategy and an action plan for the next decade, and we want to be recognised by 2030 as the leading sustainable finance centre in the markets that we serve. So this is really focusing on our specialist areas around alternative funds, private wealth, capital markets, corporate structuring. And as sustainable finance becomes mainstream, it's about being able to show that you have the right credentials and that you're taking a very systemic view of sustainable finance, where sustainability and ESG alignment flows through all of those sectors. And that means we have to focus on building capacity, on getting the infrastructure right over the coming years. So we'll be focusing on building up our expertise to help make sense of some of that ESG data, for instance, and to support our clients in applying best practices. We'll be collaborating with all our stakeholders within industry, externally, within government and the regulator, to ensure that we're creating the right enabling environment here in Jersey, both in terms of our regulatory framework, but also in terms of the fiscal environment and incentives, for instance. But I think above all, what we need is a fully developed sustainable finance ecosystem. And we definitely have the foundations for that. But I think what this strategy will do will allow us to build on that over the next 10 years, so that we get to a point by 2030 where we're really leveraging all that our island has to offer, both in terms of financial expertise, but also in terms of technology that we can deploy. And so that we are offering our clients a complete set of solutions, to allow them to make investments that align with their economic, environmental, and social values. Mm-hmm. So to me, that really is the future for IFCs, like Jersey. It's about continuing to play that vital role of facilitating cross-border capital flows and value chains, but in a way which is responsible and that serves the deployment of private finance towards meeting some of the most pressing ESG challenges that we're facing, like climate change.
Mm-hmm. Well, some incredibly exciting developments ahead, I think it's fair to say. And it's really interesting to get both the sustainable finance and fintech perspective and see how the two intersect. So gentlemen, thank you so much for calling in and sharing your insights today. And I hope we get a chance to catch up further down the line. So thank you.
Thanks, Hannah.
Thanks very much, Hannah.